See that opening range buy side taken. Okay, so I marked that out earlier. Not that that's a big deal, but this was very predictable. And then we have this regular trading arc out. I'd like to see us at least get to the midpoint here. All right. See how we just rolled down into this breaker right here? So watch this breaker. See that? We open, traded right down to the very high of this breaker. So it's up close candle here. We have a low, high, lower low, sell side taken, displacement above, wicks right back down to the high and takes off. So we have opening range buy side taken, but I would like to see us continue on to this London high coupled with this 7:15 a.m. high. That's what I would like to see. Okay, so NASDAQ did fail to get to this discount order daily order block, but that's okay. The sell side liquidity was all that was needed. So obviously with the initial 10 a.m. aggression, there was no entry point just yet. It'll be nice to see if I can't get a 5-minute entry. That's what I'm preferring as of right now. So we had that real elephant in the water displacement. Market structure shift above this high here, but more specifically, this is our opening range high. Okay, so we're above that, coming off a discounted raise, creating an intermittent term low, and then we have buy side liquidity resting up here. It's the only thing that I'm interested in. So we'll wait for this 5-minute candle to close. We'll wait for another one to form, and then another one. Okay. So unless it just shoots right up there, then we're out of luck. But I don't think that's really likely as of right now. So we're gonna wait for a 5-minute entry. This right here should act as a breakaway gap. I wouldn't really want to see this traded back into. So kind of think of it, after we take the sell side, think of it as like this is a car and it's revving up and it's really in a hurry to get somewhere. It's revving, and then boom, takes off, leaves behind those black lines that cars leave on the road, and they're going off the races. They're going exactly to where their destination. They're not worrying about coming back for anything, right? Same thing with NASDAQ. I would like to see this stay open. Okay, so short-term buy side is going to be resting up here, but I also like to see us continue higher, as stated. So we're not going to look at this rally. I'll be like, oh shit, I'm going to miss the move. I got a long right now. No, just wait. Calm down. It'll come. Come on. Don't start doing this again, TradingView. Alright, so we're opening on a new 5-minute candle. I'd like to see this relatively consolidate here and then open on a new 5-minute candle and retrace down into this blue shaded area, which is the breaker, and then just into a 5-minute inefficiency that we may leave behind. Here we go with this again. Alright, so NASDAQ just traded into that 1 minute breakaway gap. So we're going to wait for more information here and see what we do within this price range here. So like I always say, unless you see me physically taking the trade, nothing that I say is a signal. So yeah, if we go to NASDAQ, we see that we're getting ready to push into new lows. So we'll allow that to take place, and we'll see what we do from there, and see if we actually can't finally get down to that daily order block there. And then ES trading into this breakaway gap, that's not what you would want to see traded into for bullishness. So we see we traded above the opening range buy side right at the 10 a.m. news release, and the immediate response up off of that. So see that we're trading down to this breaker here. So we have a low, high, lower low, up close candle, boom. And then we also have this down close candle, which is a bullish order block. This right here will be our last line of defense in terms of looking for higher pricing. And we would like to see this low stay intact where NASDAQ takes out the low here. So that'd be our, obviously be our SMT divergence. So yeah, basically I'm just going to wait for NASDAQ to trade down to this daily order block here. There we go. So wasn't even able to get up to the inefficiency, just failed to get up there. See that? So it dipped up into the 15-minute imbalance, immediately responds off that and trades lower into the daily bullish order block. So notice how I was trying to frame a long, but there's very specific things I outlined that if I see this, then I'm no longer obviously going to be looking for longs, right? So through experience and knowing what you're doing, you're not going to lose money just because your initial idea was wrong. Now, if you're impatient and you're always trying to take the earliest entry, trying to get those sniper entries and turtle soup entries that you see on Twitter after the fact, you're likely going to get stopped out a lot. But if you wait for certain things to display themselves, then you won't get stopped out as much, right? Your strike rate goes down, or not your strike rate. Your trading frequency goes down, but your strike rate goes through the roof. The single best thing that I ever did for my trading was actually lowering the frequency of the trades rather than, trying to be in every move. Because over time, that capital compounds and builds up, right? And you surpass the guy that, thinks it's all about large gains and getting it all in one day. Well, Babito, doesn't take a guy like me to say this, but I mean, like I said earlier, we've been continuously dropping lower. I'm not going to try to catch a falling knife. We traded into very key discount arrays, such as this daily order block right here. This is blue line. We're in a very deep discount of the range. Sell side's been taken, and we have several premium arrays left behind. So we have these internal buy side liquidity up here, relative equal highs here. Then we have this relative large regular trading hour gap left behind. So it really makes no sense for me to try to continue shorting here. In fact, that's what they want you to do. They want you to be like, okay, yeah, boom, I'm getting there short. Could it work out sometimes? Sure. But is it going to be consistent? No. So ES digging a little deeper into this hourly bullish order block here, the upper quadrant. See that? And then we're also trading down into this balanced price range. I'll change the color on that actually. There we go. Lots of lines here, I know, guys. But yeah, let's say I'm wrong and it just continues to press lower. What am I going to do? Nothing. I'm not going to do anything at all, right? It's not a high probable trading environment to just short on a breakout or momentum type of idea, okay? The probabilities of you getting stopped out is you're going to get stopped out every single time. Now, there is some instances where it may work out, like I said, but, I mean, show me a 6-month broker statement of you successfully trading momentum, right? It's not going to happen. Unless you're the luckiest gambler in the world, just not going to happen, right? But anyway, sell side liquidity continuously being taken here. So we have this original 5 a.m. high taken relative to this low. We have this low taken here, one more drive lower, another drive lower. So right here, where it stands, we do have a 3 drives fractal lower time frame, 3 drives pattern lower down into the balanced price range here. And I'm going to obviously study to see what we do from there. So see this wick left behind? Kind of just worked in the midpoint there. Oops. So this is why you always wait for that red folder news release and then you try to key something afterwards. I've definitely learned the hard way that it's like, even though sometimes it might work out, it's better just to sit out every single time on the red folder news. I'm specifically speaking about 10 a.m. red folder news. It's always best to just wait for that. Okay, let that inject into the market and then try to get something after that. Okay, there's countless times in my learning journey. Not to say that I'm done learning, because I mean, I'm never going to be done learning to the day I'm done here, but over time, I was just like, okay, well, obviously this isn't working. My new rule, I'm never going to be trading prior to a 10 a.m. red folder news release. I'm always going to allow that to come into the marketplace, and then I'll look for something. And it worked out. It worked out a lot better than trying to trade before it, during it, you know. I promise. Sometimes it'll work out. But if you do it every single time, your strike rate's not going to be there, okay? They got you outside, Pinda? I'm assuming it's not as cold. It's been a little warmer here. I don't know about over there, but hopefully it has been. Alright, so Dow, where it stands, I almost called it Dow. Dow, failing to take out this low here so far. This does not mean anything to me whatsoever just yet. I need to see certain signatures on the other averages, but for now, we're failing to make that low. Obviously, we have very clean highs up here, coupled with this one. Dollar index, very large move to the downside here at 10 a.m. So, sell-side liquidity has been taken out of the marketplace. Left this intermittent term low, or intermittent term high intact, sorry, and worked within this balanced price trade. Extend that out, see the bodies at the high of it. So for dollar, now that we finally got some reasonable expansion rather than just consolidating, I would like to see us continue on to this rejection block, midpoint of this wick, and sell side. But first, it definitely would see some type of retracement initially. So I like how we traded to the daily bullish order block. So let me go to the daily time frame just to show you that. Okay. So the very high of this traded to. So every average making a low right now other than Dow. Okay, it doesn't look too bad from the last picture you showed me at work. Looks alright. So yeah, the only transaction that will be done today, unless we get a retracement and then like later on in the PM, maybe I'll short. But for now, the only transaction that I will be participating in is a longing setup. And why is that? Well, what do you want me to get in here and do? You want me to go, okay, well, we have a bearish pennant here and we have a breakout below this low. All right, I'm gonna go ahead and short that. Like there's no edge in trading that specific way, right? So, I mean, if that's how you want to make your money, I mean, just go to the casino. Like you don't need to be in the charts here. Just go to the casino and do that. But while you're here in the charts, you need to treat it like a real business. Like you just opened up a store or something, and you need to preserve your equity and be professional about it. Okay, so we're not just, well, fuck it. I'm just gonna take this trade. If I lose the money, I'll lose my fund of the account. It's alright. I'll just buy another one. If in your real business, that's just not how it works, right? You're gonna lose your lease. You're gonna lose whatever. So treat this like a real business, like it's your real equity, okay? And whenever you decide to make that transition to live funds, you deposit your own money into an account, which I would never ever suggest you do unless you have the proper capital. And that means, obviously having, a significant amount of money saved up, and then you can deposit at the very minimum, 3K. But even then, it is undercapitalized. But you can still do something with a 3K account, in my opinion. But definitely have a good amount of money saved up, because then even if you're depositing like 5K and you're trying to trade it, the weight of your trades are going to be heavier if you don't have a good amount of other money saved up. Because if you lose this money, it might be a problem for you, right? So the psychological edge is definitely a lot better whenever you get to a point where you're doing well for yourself. Alright, so Pinda, you say you have a, let's see. You have 100k static, 625 drawdown. I got it up to, oh, okay. So I have 1.6k drawdown. None of that trailing shit. I can trade 2 minis or 20 micros. How would you trade this to pass? I need 1k more. Well, since it's the combine, I'll be using no more than 1 to 2 contracts, one to 2 minis. If you're talking about a combine to pass, yeah, I wouldn't use micros on a combine. I would be using no more than 1 to 2 contracts. And just take it slow. There's no need to rush because I mean, there's no time limit, right? So just wait. All you need is like one good setup per week. If you find one good setup, the real move of the week. So let me go back. So like the real move of the week, for example, on this week, this would be the Wednesday reversal, Wednesday low of the week. Now, given that this move didn't take place after the market closed on a normal week, this would be like a New York session trading setup. Okay, so maybe get long at the Wednesday low, boom, and for somewhere up here, boom, you're done. You almost if not pass the challenge in one trade. But if you're trying to push it in not so great price action prior to the real move of the week, you'll likely lose your account before you can even catch this move, right? So I've been there, done that. Doesn't really matter about the mistakes he makes. The important part is just learning from them, clearly, and it's really just what succession trading is, just learning from mistakes that you've made. But anyway, that's how I do it. I do 1 to 2 contracts. So say we catch a really high probable trading setup. Say this was like New York. We had that retracement right down here. Boom. You can do 1 contract there. Say we get another retracement right up here. Boom. 1 more contract, and then hold on for the premium raise up here. And that would be the one setup that you need to pass your combine, right? But that just obviously requires patience and not being impulsive. But yeah, 1 to 2 contracts. I don't think it's ever really. I mean, not to say that you can't trade micros on a combine. Whatever works for you. Obviously, we're all different, all of our own unique systems, which is what makes this a great space. I just personally would never trade micros on a combine. I'm not trying to waste a bunch of time. If I'm doing a combine, I'll do 1 to 2 contracts. Now, don't go and be the guys that they interview though, okay? Because even though they think that they're doing something good, okay, they're using 15 contracts, the max that they allow, and they're getting these flash in the pan returns. That implements terrible habits in their mind, and they're gonna think they can go in and do that again. What's gonna happen when they try to do it again? All that money they made's gone, just like at the casino. They just don't know when to get up from the table. They don't know when to stop. They just so happen to get a big win. Like, oh yeah, baby, let's keep it rolling. Maybe they're drinking or something with their friends, egging them on. They're like, yeah, keep it rolling. I'm feeling lucky today. And all of a sudden, all their money's gone. So same thing in trading. All right, whenever I always say the worst thing that can happen to someone when they first start trading is get lucky and get like a huge return right in the beginning. Okay, that's the worst thing that could possibly happen to a new trader. I promise. The best thing that can happen is if you fail early on and then go from there. That's the best way that it goes on, okay? Trust. So let's see here. It is 10:27 a.m. Still within the kill zone, so although we have not yet found anything that we particularly like in terms of taking a trade on a real account, I'm still feeling optimistic here, and I believe similar to yesterday, we could potentially have a clean PM session. So we did have a very clean final hour macro of trading. I was not participating in that. I was in the 2 p.m. move though. You guys saw the executions in the Discord, but we did also have a very clean setup with that final hour macro, but I was not in the charts at the time. But I covered everything in the review from yesterday, so if you watched that, you gained a significant amount of insights, right? Alright, so this red line here, this is the previous Sunday opening. I didn't mark out the previous close just because they're kind of like, here, let me just go over to it. Okay, so we have this opening, Sunday opening, and it's basically the same as the previous week's close, so I'll just use it as one line rather than two lines. So we did just reach fair value and a discount, so this was clearly what it was wanting to continuously draw to, and we'll see what we do from here. And then here's that on ES. Did we just miss it? Yeah, we did. That's alright though, NASDAQ touched it. And then also I can take off this right here. We know that we're already digging into the daily order block here, so I don't need this. And this here was just us taking out that Friday daily low, so I can take that off. We'll go ahead and bring to your attention this inefficiency here. So we still use this fair value gap. Why is that? Because it left a large wick in it. Okay, so it's still technically inefficient, right? So unless we leave bodies over it and move through it, pass through it, that would be a balanced price range. But we still use a fair value gap how we'd use just like a normal one, like this one, when it's only a wick, large wick through it. Okay. So let me get that right. Beautiful. So I'm going to go ahead and refine it to this 15-minute high of the fair value gap. There we go. Then I'll go ahead and map out the respective midpoint. Come on, TradingView. So notice how ES just went straight through the balanced price range. That there obviously shows excessive weakness. And although we are reaching into fair value here, which is previous week's closing, okay, so although we don't have a significant new week opening gap from that week, we still reference the previous week's closure because there's still very specific things that make price draw to that price point. Just once again, just think of it like a magnet. So 10:31 a.m. It's likely we won't see anything form until that. It's like I'm almost saying this all the time now. The 10:50 to 11:10 macro, but really it does play out very well. The 10:50 to 11:10 macro has served me well, especially in this past year or so. And then once again, for those that didn't hear the commentary on dollar index, we did clear out the internal sell side liquidity here. I would like to see us continue on towards this low here. Okay, so this would be like our daily sell side liquidity pool. And then we also have the rejection block here, extend that out. So the bulk of the liquidity resides below the bodies here. So that would be our rejection block, and then we have midpoint of the wick and the sell side. But before we see that, it would be nice to see some type of nice retracement to the upside. So with longing the averages, I would either need to see us continuously consolidate here on dollar, or have a retracement up within the inefficiency and then start trading lower. So going back to the daily time frame, just to kind of speculate what's going on here. I'm not going to sit here and say, okay, this is the top. But initially, obviously, we've been rising up continuously. Okay, buy side continuously taking an all-time high. So clearly, I mean, it doesn't get any more premium than this in all-time highs. Okay, but going forward, we already slipped right past this daily for value gap. So that's one sign that we potentially might go to the sell side liquidity here, sell side liquidity here. But more specifically, I'm looking at this down close candle. If we close, just all I need is a closure below the midpoint. I'm going to start looking for sell side here, mitigation block, and sell side down here. And then we'll go from there. And then if we look on NASDAQ, we already slipped right below the daily for value gap, and then we're already at the midpoint of the bullish order block here. Alright? And we have large amounts of sell stops resting below here for those that want to, you know, oh, it's going to the moon, it's not stopping anytime soon. All their stops are below here, okay? And speaking specifically about large funds, not, you know, traders as ourselves. For a 50K Evo, is it alright to trade the same amount of contracts as you? Yeah, just like I said, 1 to 2 contracts is all you need. I wouldn't go any higher than that because, I mean, once you're trading that real account, are you going to start pushing more than 1 to 2 contracts? I don't think so. But yeah, 1 to 2 contracts. That's what I trade, and that's what I endorse you to trade. But wait, where it stands right now, it's just a matter of when we'll get some type of higher movement because this whole entire move down is just too artificial. Okay. So trend line sensation going on here. Lots of buy stops resting up above there. Buy side liquidity residing up here. Did dip into the regular trading hour gap, but we still have more room in there. NASDAQ, same thing. Okay, regular trading hour gap. Not to say that we have to get the Hoy up there to be profitable, because we absolutely do not. But where it stands right now, whoever's shorting right now, it's just a matter of when they're going to be punished here. So when we're dropping lower like this, every single time a little high here is formed, there's buy stops going above there. And the algorithm knows this. They're going to keep giving them hope, and then eventually starts pulling higher. So Nasdaq still has yet to take out this 954 low. I'm still here, guys, just silently waiting. Okay, so just so you know, this dash line here is the midpoint of this buy side imbalance, sell side inefficiency right here. Okay, we extend that over, cutting through candles, and then this here is previous settlement closing on the previous weekly settlement closing. And then looking at ES, we also traded that as well. See how I'm kind of just refining it to the 15 there? Okay. Alright, so I like this little drop lower here below these, clean those here. See how they just kind of made those relatively equal and then flush below them. This injects volatility in the marketplace if they want to start pulling higher. And then we have 7 more minutes until that macro, okay? Alright, let's check back in on Dower. Okay, Dower's still consolidating, which is a good thing. So we technically right now doesn't mean anything just yet, but we do have an SMT divergence. So down, failing to take out that 950 low, and as we know, clearly those have been taken out on both other averages. So I wouldn't consider this a very significant SMT just because of how much lower we traded below the low, but it's still an SMT. Alright, so boom, just on a fractal basis, we took out these relative equal lows, okay? Traded right below that and injects volatility into the marketplace here, looking to see if we can't do that. And regardless, I'm going to be waiting for 10:50 a.m., alright? So 6 more minutes, and that's when I'll start really considering things. And then by the time it gets to 11:10, if we don't see anything by then, and it's time to just close up shop, and then we'll be specifically dealing with the PM session as we did yesterday. So 4 more minutes begins that macro, and I'm very interested to see what we do within that. If we don't really do anything within the first 5 to 8 minutes, it's likely to just kind of be stagnant until we reach another significant time of day, which would be the PM. But for now, I'm interested in this next macro coming up. And remember, what do these macros do? Whatever is left untapped, okay, so say we're coming up off of a key discount rate, are we? Yes, we are. And do we have untapped liquidity pull to the upside? Yes, we do. So what's the macro realistically we're going to want to do once we roll into that? Gravitate towards the buy side, right? Very simple logic. So I like what I'm seeing on ES. I just need to see a nice displacement here on NASDAQ as well. So short-term buy side resting up above these two highs here initially. Okay, not only are we trading into this buy side imbalance, sell side inefficiency, we're also trading into midpoint of the wick here. So those are our key levels to the downside. We have a short-term SMT divergence here, so NASDAQ made the low here. ES failed to do so. So I'm kind of zoom in here. So 2 more minutes and we'll begin considering things. By the way, guys, I was thinking about it last night and whatnot, and I'm just gonna be, instead of worrying about posting these live streams after I'm done with them on Discord, because Discord's weird with it and it makes me condense it down so much, but really, I really need to post the whole thing because it's all important. Every single minute of watching price here plays a deep role into what we do here. So I'm just gonna start uploading the full streams on YouTube after obviously I'm done streaming here on Discord, just so you guys can go and watch it, alright? And I would say the most important part, the most beneficial thing in coming back and watching like live streams like these in hindsight is knowing, okay, this is when I shouldn't enter the marketplace, this is when I shouldn't trade. And if you know when to not trade and when you shouldn't do certain things, your strike rate's going to go through the roof and your trading frequency is also going to go down. So they kind of work hand in hand. But yeah, I kind of wanted to keep them private just to the group here, but really the only way I can really go about this is just simply just post them on YouTube and you guys can watch them. Not that I get the most views in the world anyway, so I'll just have those posted up for you guys, alright? Alright, so one more run below the sell side here. I like that. Going into right in the macro, right? Then we just shifted above this 1 minute down close candle. So initially that is significant to me. Why is this trading above this down close candle significant initially, real time? Okay, engineered lows here, boom, trades below the sell side. Optimal time of day, we enter right at the macro and then immediately see a response above the sell side above this down close candle. It definitely was more convenient. The only thing I'll give the edge to with live streaming on YouTube over Discord, Discord is better in every single aspect, but the only thing YouTube has over Discord is as soon as I was done live streaming on YouTube, it would just automatically post in my live tab on my channel. So that's the only thing that was beneficial over Discord. Discord is miles better than YouTube in terms of streaming. Other than that, so we're gonna go ahead and analyze this macro here. Still young. Let's see what we can do. At the very minimum, we would like to see price roll back up into this inefficiency, right? So this sell side imbalance, buy side inefficiency. But if it doesn't form anything here, clearly we just see us spool below this Friday low here as Nasdaq already did. So I'm not sitting here trying to say that I don't think this low is going to be taken out. It will be taken out eventually, but right now I want to see some type of retracement higher. So the only thing that would entice me with this macro is if we get displacement with speed, keyword speed, above this swing out here, and then we'd use this as our breaker to see if that can't act as some type of springboard up to the short-term buy side in the 15-minute imbalance. And let's check back in on dollar index. Still in a consolidation. So remember, dollar index consolidation yields the averages to trade whichever direction. So yeah, if we don't get too much of a move here, it might just come and slip below the Friday low here. I wouldn't be opposed to that. So definitely if we don't see any up movement here in the AM, we definitely will see something in the PM session. And especially for the newer guys that may be watching, if you're looking at this price action here, okay, don't look at this and be like, oh, wait a minute, I should have been in this short here. Look how much it dropped down. There must have been something in here. This is not something you should be thinking that you missed out on. All right, it's not high probable. It's not the key signature that we look for with the optimal time of day. Right. Lots of key levels to the upside being left behind. But let's say, so what would make this shorting here high probable to the low here, whatever else that we're targeting? If maybe we saw a buy side liquidity run above these highs here, above midnight opening price, right? So we'd have our accumulation, manipulation, and then distribution. But we failed to reach into that premium. So that would be from Monday's high to the low that we're currently at right here. So we'd be trading up into fair value, which is equilibrium. We also have new day opening gap. And then, like I've been telling you guys, the regular trading hour gap here. So we're about 7 minutes in that macro. Nothing really significant took place just yet. If we start rolling into 11 a.m., nothing really happens, then we'll just close up here. I will say though, going into this week, I definitely do like what I'm seeing on the higher time frames here, as opposed to what we've been seeing, recently in February and whatnot. The not so great kind of manipulated and held price action. So whenever we kept saying these nice moves happen after the market closure, prices simply being held. We have the earnings. That was a roller coaster ride, but I definitely like what I'm seeing setting up here on the higher time frame order flow and market structure, and that would obviously yield us good setups going into Wednesday, Thursday, Friday. But ultimately, no matter what, the main focus for the remainder of this week is going to be below this low right here, okay? So this Thursday, February 29th low, I'm saying it right now, this is my main interest for the remainder of the week. And then NASDAQ's closer to it, but we'd also be looking at this discount imbalance. And as I said, beyond that, now that we upset order flow, shifting below this down close candle here, I'd be looking at this low as well, okay? So, right here. Okay, so see this small little 1 minute imbalance that was formed after this original down close candle. We're still referencing that, okay? Extend that out. Alright, so we just opened on a new hourly candle. See that? See how we're using this volume imbalance here inversely? Take those middle lines off. The only thing that's missing from the equation here is displacement. Alright, so watch these two down close candles here. Trade back down into them. I'd like to see these hold and act as some type of springboard and take us above short-term buy side. See this 5 minute down close candle shifted above that. So I'll stay in here for 10 more minutes, okay? And then we're kind of just entering not so optimal times a day, right? But yeah, beginning of the opening on the new monthly candle here. Definitely, absolutely looking very promising. Okay. I'm definitely looking forward to it. So even though, so Monday PM session was nice. All right, I caught a nice long in some relatively rough waters. So just think of it like sail on a boat and it's very rough, but you're still able to navigate through it. Whenever we're seeing signatures like this perform in the marketplace, even though we're not yet seeing in the beginning of the week the most high probable setups that we'd be executing on with real money, it's still nice to see these signatures displaying themselves, and then we have an opposing liquidity pool that we would like to target throughout the remainder of the week. And that's a lot better than just being in this consolidation range, price being held, and then after the market close, it rallies, and those type of activities. But as it stands right now, we have a nice run on buy side liquidity into all-time highs. We had a break in market structure. This is a break in market structure because we're on a higher time frame. Opposing liquidity pool. And we have an SMT divergence, so NASDAQ failed to make a higher high up there. Now, once again, I'm never going to sit here and try to pick a top. I'm not saying this is the all-time high now and short, and it's never coming back up here. That's not what I'm saying. I'm just looking for this liquidity pool right now. See if we can't get displacement now. And this would just be like a short-term scalping idea. This isn't a scenario where you try to hold on for more than enough, right? Just looking for a short-term retracement into the 15-minute imbalance. And then short-term buy side resides up here and here. Alright, so there's our displacement. Remember, this is still a valid breaker here. It only becomes a breaker once we trade above it, though. Okay, so it's not yet a breaker. So you're just kind of entering a consolidation now. Let's check back in on dollar. Okay, rising up. Way too clean of internal highs here. Buy stops resting up above there. And then, like I said, I'd like to see us retrace into this 15-minute imbalance. I would have liked to see this happen earlier, of course, but it's just now happening. So up off of this retracement, we'll see if we can't frame some type of shorting setup on dollar, which would yield a short-term long on the averages. So we have this 15-minute imbalance to be traded into. We have this large wick left behind. And there's short-term buy stops above here, here, and here. So in trading, there's exceptions to everything, but as it stands right now, this Monday and Tuesday looks like it's going to be the classic kind of setting the stage for the week. and then the rest of the week the real moves come into play. If I had to average everything out across my 4 years of trading, in my opinion, okay, this is different for everyone else. We all have different experiences, but Wednesday and Thursday just always seem to be my absolute best trading days. Alright, so we're dropping down into the high end of that discount and efficiency. This is that pink shaded area. See if that can't propel us above the breaker here. And this line right here is our previous weekly settlement closing. So the price draws to this as a magnet because it yields fair value to larger funds. So not yet clear if it'll yield us a high probability entry point, but it's definitely more high probable that we'll see us roll up into this sell side imbalance, buy side inefficiency right here, at minimum. Okay, so we can have our higher targets and whatnot. I don't know why I still have this up here, but we can have our higher targets such as this opening of the wick, midpoint of the wick, stuff like that. But you don't need it to trade the whole way up there to be profitable. Whether that's not even aiming for it, just simply having to take profit somewhere up here, or you take a partial here and then hold on for that higher target. And I did have a lot of guys asking me regarding TradingView and funded accounts and whatnot. It was like, oh, wait a minute, I can't take partials. It's not letting me. Just go in. Like, I'm not going to do it here, but just go in, buy one contract, and then just go right back in, buy another one contract. So you just have to do your buys separately rather than just getting in there and doing both of the units at once. So you buy it once, set your first take profit, buy it a second time, second take profit. So I know most of you already know that, and that's like beginner stuff, but I had people asking me, so there you go. That's how you'll be taking your partials if you're trading the funded accounts. So see how this works? This right here, right now, is a bearish order block. But if we were able to trade above that with displacement, it now turns into a breaker. Okay, so it's basically just a failed order block. Why is this an order block? Well, we came up short, swept this very short-term swing high here. Coming up off these up close candles here, we create this very small imbalance, and it takes us below this low here. So this right here would be a 1 minute fractal bearish order block. And notice how price held right at the midpoint. See that? But yeah, guys, the week is young. It's Tuesday. I'm content with what I did here today. Appreciate you guys all watching, and I'll be checking in on you in the PM session and seeing you tomorrow morning as well. You guys can see it. But anyway, entry criteria. Remember, we had the market structure shift after a failure swing and displacement. We have this inversion for value gap that should hold as it already has. Okay, so inversion. Remember, this is our mitigation block. It's going to be a lot of words up here, but I just want to have it all in here. And actually, I think I can leave that out. No too much there. Inefficiency here, okay? And then going back to ES, we were actually able to take out this Friday's low now, so we have a significant discount liquidity pool taken out of the market. So I definitely cannot start trailing my stop up. That's not going to happen here because although it would be preferred to see us just go straight up for the buy side, that would be the highest probable contributing factor to a winning trade here, but there definitely is a chance for us to still drop back down and within. So we did exit that macro, but the macro started the move. That's what's important. So if your model is going for 5 handles, you longed right here at the signal, boom, you could have got out right here. That's a little over 5 handles. That's what you go for, and you just look for a consistent 5 handles. That pays too. Whatever personally works for you. Okay. This isn't a group where like you just watch what someone does and you think you need to be doing the same exact thing, because you don't. We're all unique. We all have our own personal models, and I love it. So notice how we come up and relatively match a dollar index. Made a nice failure swing, and then we're displacing lower. So this supports my current trading idea right now, okay? And this sensation takes place more times than I can tell you, okay? Trades up, matches the high, trades off, makes it look like it's a clean resistance level, and then boom. Eventually, at some time, just trades right through it. So those that put their stops up here, they get punished every time. That pop-up right there, that was my live stream from this AM loading, and I'll be posting that. Okay, so there's take profit number 1, and then we'll put the executions up there. All right, so the first take profit $400, just about 150 here. I'll just go ahead and take full profits here, okay, just before it went down. So 2 contracts, a little over $500 there. This is I want to say perfect, but not so perfect depiction of how you would utilize that lunch macro into an untapped liquidity pool. So this right here is using the lunch macro 101, and then we were using dollar index inversely short term.